Good morning, afternoon. I don't know what day or time it is. First of all, I would like to say an awesome thank you and congrats to Zach and the team. This is really unbelievable. So first question, this is the family office panel. So how many people in here are family offices, allocate for family offices? Okay, all right, cool. So can I take this out? Can I be like, okay, so that really helps me understand who's in the room. So we have some excellent panelists here, and I'm really excited to have this discussion because we have deep expertise and knowledge. So I want this to be dynamic. And so if as we're speaking, you guys have a question, just raise your hand. So Kurt and Brent, if you guys would take a couple of minutes, just introduce yourselves, and then I'm going to jump into our questions.
Hi, I'm Kurt Overley. I have a family office with my brother. We are former applied math guys, went to Wall Street early 90s. We both worked on various trading desks at various big banks. I've done some private equity investing and worked as a CIO and chief risk officer for some other very large family offices. Now I'm spending most of my time making investments on behalf of our own balance sheet.
My name's Brent De Jong. I also started on Wall Street and went to the buy side in 2002. It was at what was then a relatively small fund called Ashmore in London. And we grew it from 1 billion to 80 billion in 10 years. That was based off of really a combination of things, good performance, but also being in the right asset allocation space because we're focused on the international markets, and a lot of people wanted exposure at the time. I ran the special situations business, infrastructure, credit, and sat on all the other liquids portfolios as well, but on a day-to-day basis, really grew up as an investor, doing a lot of bankruptcy restructuring work in the international markets. 2012, I left and started investing on my own.
Thank you. Okay, so the first question is for Kurt. So you went from having no blockchain exposure to having it being a focus of your family office. So can you share that origin story? What were kind of the catalysts leading up to it? And for those families who are maybe thinking about it in the audience or watching the video, how do we think about that in a meaningful way?
So going back many years, I was curious about the technology, dabbled, bought some Bitcoin just to see what does it mean to have a wallet and buy things, but really didn't get it. There's a lot of talk about interesting use cases, but I didn't really see any real companies or products. Because of our trading background, of course, anytime we see liquid assets with a lot of volatility, that obviously piques our interest. So from a pure so we've made some allocations to groups that focus on low latency arbitrage trading, because again, we just view that as just mining volatility. Also in the DeFi space, although we're not believers in it, and we think ultimately it will all go to zero. Again, we're perfectly happy to make money in the meantime. So we also allocate to DeFi yield harvesting, but we do it in a market neutral-ish way. Obviously, we are taking some risks, but we're not taking we don't have direct market exposure to crypto per se. So I guess you could really lay the blame on Zach at Unbounded because he had this very clearly articulated contrarian position, which was just so far away from what I had seen, coming from the rest of the mainstream, tech, Silicon Valley types. It just really took me aback, and I did some research, and I was just blown away. I mean, we really just, for all the reasons we'll get into later. I mean, and for all the reasons everyone's been talking about throughout today. I mean, we just think this is going to revolutionize and disrupt so many different industries. And this is really, I think it's by far and away the biggest thing that's ever happened in my lifetime that that I'm aware of, and early enough on to take advantage of.
Out of curiosity, so how long from the time that it became like an idea you were interested in and you did the research until you actually pulled the trigger? Was it a matter of weeks, months, a couple years? What was your...
Months.
Okay. All right. Thank you. So Brent, which came first, your family investing in blockchain or Qenta adopting it, or was it a combination? You said it was a little bit of both, but also lead us to the origin story of your current portfolio.
Yeah, so I guess it was about the same time. In 2012, when I left or I retired from Ashmore, and it's like, okay, I need to do something totally different. So I said, I'll give back a little bit. And I worked with a group called BENS, Business Executives for National Security. I went to the Naval Academy, and so I said, okay, I want to give back. And so they started throwing me at military projects to bring business practice to military. Found myself in a room counting ISIS money, and most of it was moving through Bitcoin charity wallets at the time. And I was like, what is going on? This is 2012, and I didn't really know anything about Bitcoin. Having worked in emerging markets, I knew everything about Swift MT100 payments. I'd securitized them and helped banks raise billions of dollars. We had helped move commodities. We had helped do all these other money movements, but had never really had exposure to Bitcoin. So I saw that, but also saw the regulators in the room, kind of their eyes open that, hey, there's this thing called the Blockchain Explorer. There's these tools. And so I went out that week and probably bought my first $25,000 worth of Bitcoin because there were so many new things. And it was the only thing that was innovative that I felt was going the right direction, even though there were, sure, bad actors, bad use cases, but as we saw this morning, that evolution has changed dramatically. So at the same time of just kind of moving to invest, I started into blockchain. And actually on the back of that, I filed for a patent to tokenize any assets of blockchain and started what's called Gcoin today.
Awesome. Thank you. So both of you have investments both in digital assets and companies using blockchain technology. So help us understand, how do you describe the core differences in those approaches, and how do you diligence them differently, and help us learn from your experiences? So if we've never looked at either of the classes, what are we looking for and how are we looking for it?
Yeah, so I would say about half of our portfolio is, let's call it fintech, so blockchain or technology enabled businesses. And having been a more traditional investor, special situations, very cash flow driven, often contracts or predictable or somewhat predictable businesses. In the blockchain space, a lot of it is very conceptual. Today that's different, but in 10 years ago, it was I have an idea, and a lot of that idea was technology driven, was not necessarily use case driven. And so now today you can focus a lot more on what's the problem you're solving, why is that something that a consumer or a business or somebody's going to have a value and going to pay you for that. And so we spend a lot of time today around those specific solutions and why adoption is not going to be overly expensive, right? Because a lot of this is customer acquisition that you have to do in order to change behavior. And so we're really looking at the business use case today. And yeah, sure, technology advances are still interesting, but these are real businesses today, and it's really exciting to see a lot of the things that are coming across the desk.
What are the 2 or 3 top things that you think are different to look for, something we might not know to look for in doing the diligence or evaluating the opportunities?
Well, I think one issue is whether you actually have a product completely finished. We don't underwrite blue sky projects. So we want to see that there's a product in hand, or at least kind of a beta version available. although we've invested in situations that are pre-revenue, generally speaking, we want to see that there actually is a pipeline of customers that are familiar with the product that are basically onboarding it. So these are a few boxes that we like to see checked before we would kind of seriously consider something.
And how do you look at those asset classes differently? Digital versus a blockchain tech?
Okay, so when it comes to crypto as crypto, the way number goes up, we don't have any idea. Like the valuations there, I just think are, well, our view is that it's all going to zero. We won't touch it unless we're just taking kind of this market neutral arbitrage type approach.
Very interesting. Does anybody have any thoughts or comments on that?
Thanks. Can you explain your thesis and kind of some inputs into your belief that all crypto will go to zero?
Yeah, so basically it has to do with, I think that there's one chain to rule them all. Because, actually, Xiaowei Wu is in the audience right over there. So thanks to efforts by many people in this audience and that man in particular who has a software company, Script, at the last blockchain conference, he announced, for example, that he's released what he calls his transpiler, which is a compiler from Ethereum Solidity smart contracts and compiles it into Bitcoin Script. When I heard that, that basically, to me, that spells the death knell for all the other chains because, and in conjunction with some other work, because he's also done a lot of work on some of the privacy protocols that are driving other change. The zero knowledge proofs that are driving Zcash, the ring signatures that are driving Monero, this Taproot upgrade for BTC. All these things he can do very quickly, very simply, with very minimal amounts of coding, in his scripting kind of higher level Java-like programming language. And, if you can basically do everything that the whole reason for having these other chains was to do smart contracting. Well, you can replicate that without the gas fees on BSV.
So quick follow-up. So are you saying that all cryptocurrencies, blockchain assets, including BSV, are going to zero?
No,
or you believe the value will flow into
I think
BSV?
everything else is going to zero. Now, what happens to BSV? I don't know. We think of it kind of like Bitcoin SV. We think it's more interesting to invest in the companies which are building on Bitcoin SV, but what will happen to BSV? It should go up.
Thank you.
So thinking about a thesis like that, where you have for example, like a bunch of DeFi stuff in a portfolio, how do you choose when to make that exit? I have Warren Buffett in my head saying it's about time in the market, not timing the market. So how does that play in? Like, who's managing that? Like, what are your time frames on things like that?
So, I think the real risk that you have for any kind of DeFi is basically some kind of hack protocol. This kind of slow death, it's going to take years and years. It's going to be a very slow, drawn-out process. It's not the kind of implosions that happen at Terra Luna, which, by the way, we didn't have any exposure to that. The idea of having a stable coin which is backed by an algo, I can't wrap my head around that.
So I kind of have a different view. My view is that there's not a single winner, but I do think that there will be a small number of people that will take the overwhelming amount of the pie. My view is I actually think about it also because of Gcoin, which is tokenized gold. A lot of start really at the value of money. And I look at the world in the future and say, hey, we might have 10 nation-backed stores of value, and we may have 10 or 5 to 10 protocol-backed stores of value in some way, shape, or form. And that will drive liquidity, and people make choices of where to store their value based off of any number of different things. And it could be politics or just relationships with other friends or family or who you do business with. And so you look at that type of environment and you look at market structures, and it doesn't matter if it's banking or telecom. Usually what happens is it's the kind of top three make 85–90% of the money, and then often you can have a fourth or fifth around, and then after everybody else after that will struggle, and that's just kind of it's almost like an oligopoly type of market structure that it naturally evolves over time in all these different industries. And we've seen it in, well, there's small countries like the Benelux states, or it's large countries. I think the US banking sector is maybe the total anomaly to that, where we have, 4,000 or 5,000 banks, but almost every other place in the world where, real natural market forces have developed, that's the case. Look at Nigeria. They put out 16 telecom licenses. Guess what? It went down to 3 profitable, a 4th and 5th stayed around, and the rest went bankrupt. So, it's just, it doesn't, we've seen this time and time again in different industries and industry structures. What's the path to get there? How does that happen? I think these are the things that, people in this room are going to decide over time, and it's the pace of innovation, it's, different, breakthroughs. But one of the things that we're doing, for us, blockchain and digital assets, it's not just about layer 1, layer 2. We actually think there's going to be a lot of layer 3, layer 4, or, I'm starting to think about what I call layer 5, and which is kind of suites of smart contracts and kind of auditable back into some of the layer 4 registries and stuff. So you could have an oligopoly market structure around some of the layer 1, layer 2s, but you may end up in a little bit more competitive, at least for some time period, in layer 3 and layer 4 as people are kind of moving into that. And of course, if you have the tools in layer 3 and layer 4, they're going to reinforce who's going to win in layer 1 and layer 2. And so we're thinking, and we're actually investing more of our cash at the layer 3 and layer 4 level.
But along that viewpoint, give me an estimated time horizon for when you think layers 1 and 2 are going to be a little bit more solidified, as in the oligopoly is established.
Yeah, well,
Ballpark.
Some people would say that it already exists today, because Bitcoin and Ethereum are the overwhelming majority of the liquidity. Obviously, in this room, and I would tend to agree as well, that's going to all change again, based off the pace of innovation. Liquidity often defined who the winner is, and not necessarily the best of. I do think that could change, and I actually do believe it will change because of the way that we're positioning ourselves. But I think it could be another 10 years.
Okay. So can somebody get a microphone for Rick, and then I'm going to ask this follow-up question while the mic's going. So, so based on this, how have you seen the attitudes of family offices shift from the beginning of the opportunity to now? And what do you think is going to be happening in the family office investment world in this space in the next 6, 12, 18 months?
I really haven't seen much movement, frankly. It's almost bizarre how little known outside the ecosystem of Bitcoin SV it is known. It gets zero press. It's almost, it's almost like I can't fully explain it, but there's zero knowledge about Bitcoin SV outside the companies that are actually building useful products using it. And will that change in the near future? I don't think so. I suspect it's going to take companies in this room becoming wildly successful and taking away market share from existing businesses to really kind of force people to take attention.
Yeah, I saw a lot of very vigorous, positive head nods, but what that leads me to believe is this is where the opportunity is, right? You don't want everybody knowing about it and jumping in, right? Well, first mover advantage.
Well, I think the first mover advantage has been there already. And so what I'm seeing is that and this is kind of the lens, from having been a part of and helping grow an asset management business, that a lot of the structure of money is based off of an asset allocation model. And so when I was at Ashmore, it was all emerging markets, right? So the pitch that we gave to our potential investors was allocate 15, 25, some large percentage of your portfolio to emerging markets. And sometimes we even took a position to go so absurd to say, allocate 50% of your position to emerging markets. Well, why is that? Because 3/4 of the population of the world lives there, because 50% of the world's GDP is there. And so it's just logical that you're going to allocate a portion. And so when you talk to somebody who has 0 or 2 or 3% allocated to emerging markets, and you start looking at that fundamental, that kind of secular trend, and they say, well, maybe I'll make a 5% allocation or a 10% allocation. So you're not getting them all the way to the 15, 25% allocations, but you're opening the thinking that this is the world we live in, and you want to allocate. So that's happening now within crypto, digital assets, blockchain. So you get firms like Cambridge, and Cambridge, goes and advises the largest pension funds, the largest endowments. But guess what? They also advise family offices. And so when Cambridge says, hey, put 1% of your portfolio pension fund. I live in Texas. We have $500 billion easily, down the street. And if they say, all right, I'm going to allocate 1% to this asset class, then that's big. Well, if they're allocating 1%, the family offices are starting to allocate 2, 3, 5%. The family offices usually lead the pensions. They're faster. Endowments are a little faster in pensions as well. So you're starting to get that. Now that's drawn back because of all the volatility. And if you're like Kurt, which I tend to believe, volatility creates great investment opportunities. You should be piling in, but because their institutions, there has been some slowing of that trend. But I do think that that's going to continue. So when people start making asset allocation decisions, then it's like, okay, I got to do something. What am I going to do? And it's not just any longer, I'm just going to blindly buy the liquid Bitcoin, Ethereum because there's liquidity. They're going to start making decisions of, hey, who is smart in this space that can help me pick the winners, the future winners in this space. And that, as that happens, and I think we're really early in that, but it's starting to happen now. And when you start having that, then you're going to see a lot more dynamic change. And it's not just a token hype, but it's fundamental questions about what's capabilities, what's speed, what's throughput, but also who owns the customer. That's one of the things we really haven't heard here today, really at all, is that we've heard a lot about technology, but we've heard almost nothing about the customer. And quite honestly, blockchain doesn't matter at all if you don't solve a problem for a customer. It's the customer's not looking to just do something cool. They want to do something practical, something that changes life and makes it better. And so that's the one thing I would encourage anybody or everybody to do is think about the customer. Whether it's a business or a consumer, it doesn't matter. That's where you need to spend your time and energy.
Yeah, and along those lines, so we're almost out of time, but I do want to ask this one quick rapid fire. So what do you guys think as investors, what are the best investment opportunities in digital assets, blockchain? And also Rick does have a question, which maybe you guys can answer it later for him, because I think I'm about to have the hook pulled on me. But I want to know, you are the investors. What are you looking at? What are the best investment opportunities? Where can we co-invest with you?
So, we're particularly focused on 3 verticals within the blockchain world. Software companies that are building real products in payments, in gaming, and in enterprise and supply chain management software.
A lot of overlap. At Qenta, we do some supply chain, and so one of the things we're doing right now is geo-locked DAOs. So you can ask, based off of a data token, the identity, do they sit within a polygon, and then they're part of the governance structure. So that's something very specific. We've also been doing a lot around content. So one of the recent investments was, it's not blockchain, but crimedoor.com, which is a content aggregator of true crime. It's very retail, focused. Or another one was Passionomy, which is passion and gastronomy, monetizing Michelin star chefs. So the first one was with Neil Mant, who hosted the Golden Globe Awards, and then the second one is with Michael Elliott, who is the president of Michelin Guide. Both content, type of things, more VC-like, but our prerequisite is they're going to use blockchain payment tools. so again, just a lot of it's consumer-driven, content-driven, type of stuff.
All right, thank you so much. Awesome panel.